Hi, everyone. You don't want to miss this episode. It's the October update. What's going on in the market, Bitcoin, real estate industry? Let's dig into it. Hi, everyone. I'm Darren Mitchell. Welcome to Control and Compound. Joining me as always, Christina White. Christina, how you doing?
Hi, Darren. I am doing great. October, it's fall. It's my favorite season. So, I can wear my sweaters comfortably. I love it. It's a great month.
Yeah, we've had a great fall so far. I'm very pleased with the weather. All right, Christina. Lots of people talking about this first topic we're going to cover, and that is the Bank of Canada. What happened with the Bank of Canada?
Yeah, so September 4th, we saw another rate cut. So Bank of Canada cut its rate by 25 basis points again. So we're now sitting at 4.25%. Prime is at 6.45%. So we're seeing those decreases, right? We're seeing those cuts as these announcements are made. And that is primarily to do with what's happening with inflation, right? Their goal and the reason that we saw those interest hikes happen was to cool inflation. And now, as inflation stats are kind of rolling in, we saw that in the month of July and August, we actually hit a 2%. So they were forecasting a 2.1%. We're actually at a 2% inflation rate in Canada right now, which is exactly where they wanted to be. That was the target. Now, that is primarily to do with gasoline prices kind of going down. Clothing and footwear went down for the eighth consecutive month, 4.4% in August, following a 2.7% decline in July. Now, shelter costs, as we know, they're not down, and I know it says inflation's down to 2%, but like all of those increases we saw over that last year, they're not going anywhere. It's just that we've
The
cooled.
rate of increase is down to 2%, but we still had the 20 or 20 whatever percent increase we've had in the last couple few years.
Exactly. So, and when we're looking at shelter costs, they still rose 5.3% last month. Like they're still going up, but in July it was 5.7. So we're cooling is what they're saying. Now, on the flip side of this, we also had the stats come out for our GDP, and we went up 0.5% this second quarter. We were up 0.4% the quarter before. So I guess we could call that expansion, but not by much. So and if we look at where that growth came from, about it was primarily driven by 1.5% rise in government spending, fueled by higher wages, a rebound of the federal, provincial, and purchases of goods and services. It was all government. So that's where we saw it, which, take it or leave it. We've also saw the employment rate steadily move higher over the last year, and layoffs are starting to take hold. So the economy is not looking great. So it is looking like we are going to continue seeing these interest rate cuts. That's what people are speculating, right? Now they have to take focus on what's happening in the economy. People are actually saying we're probably going to see a few more 25 base interest point rate drops towards like a 3% rate before the end of the year. And that's to kind of get that, the economy, that GDP growth going back up. So our next Bank of Canada rate announcement is October 23rd. So we'll find out if that speculation happens and we do see that increase. But look, based on what we're seeing, it's looking that way.
Yeah, I was actually I was at a speaking engagement this week, and there was an economist from the BDC speaking, and they're forecasting two additional rate cuts by the end of the year, and then another, I think, one or two by July of next year. So they're anticipating, the economy is slowing, the unemployment is going up. Their goal of increasing interest rates to slow down the economy has worked. Whether they overshot or not, we'll see. Whether we can continue to have government spending to drive our GDP and massive population influx, we'll see how that works long term. But the good news of this, the silver lining, is we are going to get some relief with those mortgage rates or interest rates in general. Is the hope anyway. So that's a bright side for sure.
Yeah, and then just going into our Canadian dollar update, because this all kind of ties together, right? When we're looking at it, the Canadian dollar, they see that the economists are predicting more rate cuts. We're seeing rate cuts. We're sitting at 74 cents right now. It is predicted that we could see that go down a little bit based on what we're seeing out there with GDP and inflation rates, cuts, all of those things. So right now, sitting at 74 cents, but we wouldn't be too surprised if we saw that move, maybe not in the direction that we want it to.
Yeah, and then for economic news, I thought I'd share something. I thought an article I found was a professor in the university, Calgary University, did this comparison on tax rates by province versus the each of the American states. So I want to share something like this, some numbers here. He used an income of 75,000, 150,000, and 300,000. What would be the top marginal tax rate in each province versus each state? And I thought it was really interesting because Canada really has those high tax brackets, especially in the higher incomes. So if we look at $75,000 of income, Quebec, you're in a tax bracket of 39.5%, Nova Scotia 37, Ontario, you're down to 29, BC 28, Alberta 30. But if we look at one of the highest tax state, California, they're at a 30. We go down to some of the lower tax ones, we're down to that 22, 24. But when you get into the higher incomes, the top tax bracket in the States doesn't kick in near as soon as it does in Canada. So if we look at an income of $300,000, here's the tax rates in Canada, what the marginal tax rates you'll be in. So for every dollar, you'll pay this percent in tax. Quebec at 300,000, you're in a marginal tax bracket of 53.3, 54 in Nova Scotia, 51.75 in PEI. Manitoba 50, New Brunswick 53, Newfoundland 53.8, Ontario 53.5, BC 53.5, Saskatchewan, Alberta, they're down around 47. If we look at California, which is the highest taxed state, California is at 41%. But if we look at some of the lower tax states, so we've got, Florida, Texas, Tennessee, Washington, Wyoming, North Dakota, they're all around 32% tax. So, we'd average around 52 if we averaged our provinces, and those lower tax states are at 32%. So on $300,000, 20% difference, that's a $60,000 additional tax bill you'd pay in Canada on a $300,000 salary versus some of those lower tax states. That's huge, $60,000 on a $300,000 income. Now, what's the argument, Christine, everyone makes about, well, you're going to pay higher taxes, but
you're going to pay for healthcare. It's always what it's going to be. But we've done this math before, and I think healthcare costs around $1,000 a month or something in the States. But if I could save $60,000 and just spend the 12 grand on healthcare, I think I'd do it. Right? Like I think that's a pretty good. I think that math makes sense. It's not. That is not. It's not surprising, but it still does make you a little bit frustrated when you think about it, and when you think about what the tax rates are in Canada and what we're paying. And it makes you realize even more that we have to be thinking about tax strategy, right? We can't just assume that we're like that we don't need to plan for this, right? That's massive.
Yeah, and I get that everyone doesn't make a $300,000 income, but when you think of the higher level, the executive, the IT people, the best of the best, it's really hard to recruit when you say, hey, you're going to pay an extra $60,000 in tax here. Not to mention the capital gains inclusion and all these other taxes, the 15%, 13 to 15% sales tax in most provinces, et cetera. So and the higher property taxes. So it's relevant when these companies are trying to recruit people, when a lot of these top talent, they could choose to live in the States or Canada. So anyway, worth noting, still we live in the greatest country in the world.
Yeah, and you mentioned that, and I was talking to when we were at the conference this last week. I was talking to a few people, and they look at that when they're looking at purchasing their real estate properties too, right? Some of these places that have the lower taxes, that's where companies are going so that they can recruit employees to come and work for them, and the employees can afford the housing and things like that. So it is definitely something to keep in mind when looking at the tax rates in the U.S. if you're investing in the U.S. and investing in Canada, because if you've got those lower tax rates, there's a better chance that you're going to see more businesses come, which is going to help you with your real estate investing, right?
Yeah, and I mean, you speak of that conference, like there were many exhibitors talking about how to invest in the U.S. And 3 4 years ago, we didn't see that. But with the increased taxes, with the increased regulation, with the you can't rent to who you want to, and the tenants often having all the power in some of these provinces, people are going, why don't I just put my money in the States, which is, I think horrible long term for our country because we want money flowing into Canada, but with red tape and regulation and high taxes, money's now flowing out of Canada, and so you have Canadians investing elsewhere, and you have people from other countries not wanting to invest in Canada for all the reasons you and I both listed. So anyway, it is what it is. We still live in a great country, but I wish our taxes were lower. On the stock markets, pretty good month for the stock markets. U.S. S&P 500 is up 2.8, so 19.5% year to date. Canada was up 3.8%, so they're up 14% year to date. Bitcoin kind of flat. Bitcoin was around $61,000 at the beginning of the month here in October, up about 3%, 37% up year to date, and still up that 121% in the 1 year period. One of the interesting things, because one of the questions people ask is, and we're not Bitcoin experts, we just have fun with it. We don't pretend to be experts, but people are like, I thought the price would have went up more after the halving. And people are like, well, it already jumped a bunch before the halving. So I just went back and looked at the numbers for the last halving. So about every 4 years, a halving occurs where the miners get paid half as much Bitcoin. And if you look historically, people go, oh, the price, goes up after that. But I actually looked at 2000. So in May 11th, 2020, sorry, 2020, in May 11th, 2020, Bitcoin was around $9,000. If we go May all the way till October, Bitcoin went in 2020 from 9,000 to 10,500. So it didn't move much at all. Okay. And then in the next 3 or 4 months, it went up 270%. So, we saw a delay last time, really till the fall before Bitcoin went up in the halving in 2020. Will we see it again? Who knows? But I thought it was interesting. It's not always right after the halving when we see the increase. Oftentimes it's a few months delayed. And then just a quick update. So there's 21 million Bitcoins is the maximum we will ever have out there, and they keep mining them every day until we get to that point. Right now, they're at 19.76 million out of those 21 million. So there's about a 1,250,000 to go of the 21 million Bitcoins. So anyway, that's a Bitcoin update. What about real estate, Christina?
Yeah, moving into real estate. So, just looking at some stats over the month of August, the market experienced slight gains in home sales. So, home sales were up after we saw those rate cuts, right? People are looking, people are buying, which is great to see. The average home price in Canada stood at around 650,000. So that is a 2.7% decline from the previous month and about a 0.1% 1% year over year over the previous year. Now, as we always know, it's different markets in different provinces. So we're seeing amazing growth in Alberta, 11% year over year. We've got New Brunswick at 7%. We actually see Newfoundland hit the board at 10% average price change growth year over year, which is kind of crazy, but it's a different market out there. Now, as I say these stats, while we were at that Keyspire conference last week, someone did mention to to me, as a real estate investor, like, yeah, these are nice stats to see what the appreciation is like in Canada. But as a real estate investor, you're typically not in the family home market anyways. So just because, Ontario, we've got an annual price change -1, BC -1, that doesn't mean that there's not still deals out there to be had in those locations, right? You can get that gain in the buy when you're purchasing for different reasons. Multifamily is a lot different when we're looking at this. There's lots of different investments out there. So, overall across the country, the real estate market is doing well. And I think that there's definitely, and I'll tell you, seeing as many real estate investors out as we did at that Keyspire event last weekend, it's still going strong. There's still lots of people that are investing, developing, and doing some amazing things right across Canada. I think I talked to somebody in every province that is doing some type of deal. So it's out there. The real estate's a great place to be. Now, I did read some reports as I was going through things, as I always do, kind of getting the update. And there was a report that came out from CMHC that said that there was a decreased housing starts by about 30,000 units last year, which is not ideal. So 30,000 that should have started did not. We know how much we need those housing starts. So it's not ideal that they didn't. They're saying that it was because of those higher interest rates. So the slowdown in new construction, about 10 to 15% reduction, they're saying kind of came from the higher interest rates. I do also think it has a lot to do with a lot of the red tape that's out there. You hear some of the stories of what people have to get through in the development side, but 30,000 should have started that didn't.
Housing starts went down 30,000. I thought the federal government stepped in and they were going to build all these homes and we were going to spike up to massive increase in the amount of homes built. Are you telling me that didn't work?
Didn't work. I can't speak for them, but it did not work. We seen a decrease, which is not ideal. Now, on there, speaking of them though, they did make some changes to the mortgages. That was announced this past month that as of December 15th, they are increasing the insured mortgage limit is going to be increased from 1 million to 1.5, right? So now there's going to be homes that, and this is really for first-time home buyers, right? That they can now put 5% down. The typical home price in some of these areas is over $1 million. So they were, you couldn't even purchase in some areas if you only had 5% down. They did add that increase. So now up to 1.5. And then for new home buyers as well, we saw that 30-year amortization period come out for home buyers. So previously they were saying it was just for new builds. Now it's going to be for every new home buyer. You can get that 30-year amortization period, which is kind of neat. Like, I think that's a cool change that's going to be happening, and it is going to help new homeowners get into new houses, which I do like to see.
Yeah, no, okay, well, that's positive. On some industry news, I pulled up some stats I thought was interesting. So Canada's life and health insurers paid $128 billion last year in claims. So you want to think how big of industry the insurance business is in Canada. So a lot of that was health and dental plans through group insurance, through people's employers. But I pulled out the life claims. So in Canada last year, life insurance claims were $17 billion in 2023, and that was up from $16 billion in 2022. So you think of that, $17 billion tax-free went to the beneficiaries across Canada for death claims. The other interesting stat, the average life insurance protection per household was $483,000, and that's up from $474,000, and that represents about 5 times household income. So that actually surprised me. It's a little more. Like, we love 10 times income, but 5 times income was kind of the average, or $474,000 when you look at the average income. And of the insurance sold in Canada, 83% was sold by life insurance agents, and the other 17% was through the group insurance, at your work, 1-time salary or 2-time salary, et cetera. But $17 billion in claims paid is pretty cool. And the total amount insured right now in Canada with life coverage is $5.7 trillion.
Whew. So
there's lots of future death claims to be paid. Now, some of that will be term insurance that won't actually pay, but the permanent stuff, the good stuff that we do, will all get paid. But $5.7 trillion of coverage right now in Canada, $17 billion paid last year.
That's really cool to hear because a lot of people do ask us, do these insurance companies pay claims? And yes, they are absolutely in the business of paying death claims. That is what they do, and those stats kind of show it, or they do show it. Okay, moving on to control and compound news. So, as I had mentioned earlier, we were at the Keyspire Investor Summit last week. It was awesome. We had a great time. Darren was on the main stage. He also had a workshop. It was so nice to meet so many different Keyspire members and real estate investors right across the country. It really was an amazing event. So, we were grateful to be there and have our whole team there. Well, not our whole team, but a lot of our team there, which was pretty awesome to have. Coming up this month, we are going to be back in Toronto again. We're going to head back to Toronto for the Real Estate Investors Summit. It's being held at the Delta Toronto Airport Hotel from October 31st to November 3rd. That one's going to be a really great event too. They've got Kevin O'Leary on the main stage, Mike Holmes, Michelle Romanoff. So some really great speakers, including Darren himself. So you're going to want to be there for that. So if you haven't got your ticket yet, make sure you do. Our team will be there meeting and having a great time. Another big piece of news, and I don't know how we took this on in the midst of all of these events that we're going to be at, Darren, but Control and Compound is moving offices. We're growing. So it's been an amazing last year. Our team has been growing, which means they need more room. They've been asking us for this, right, Darren? They need some more space in our back office, our operations team. They requested more space, and we're going to deliver. So we're going to be moving this month into another office. Now, it's not going to impact clients in any way. You might see a new address on our signature lines and whatnot if you're coming to see us in person, but we'll have that announcement sent out just so you know where we'll be. We're not going far. We're literally moving across the street, but it's going to be a nice big office, bigger, so that we have room for our growing team, which is super exciting.
Yeah, excited for the move, and yeah, Keyspire was great, and I do want to thank my opening act, Shaquille O'Neal. It was really, I was like, what do you mean? What do you mean I'm following Shaq? It's like, really? I gotta follow Shaq? But it was really cool, and we were lucky enough to get a picture with them, so that was kind of neat. And then on the podcast front, we did have we had an awesome month of podcasts actually. We had Dan and Connor, two of our wealth coaches, join us for a podcast, which was kind of cool. And we talked about the holy grail of loans, and we talked about what IBC has taught them. So we kind of got a perspective of some other wealth coaches other than just Christina and I, what they were doing. We did a cool one on buy term, invest the difference. We had Michael Sarancini on from Keyspire. Michael's a fantastic speaker. If you get a chance to see him, listen to that podcast. I encourage you to do that. We had one on how policy loans work. And then we talked about our Canadian business owners that we're rooting for you. We're on your side. And we talked about all the levels of taxation that they've accumulated over the last 7-8 years, or the tax breaks that they've removed from Canadian business owners. Good news, we still have some solutions, but we talk about Canadian business owners because we're big fans of you guys.
Awesome. We also have a really great lineup coming into October. So while we were at that conference, we actually interviewed a number of different real estate investors and experts, and we're going to have a full podcast come out here very soon, probably the next week or so, going through all of that, our interviews, our introductions, some tips, real estate tips in there. So that one's coming out. We also are booth neighbor and great guy, Bob Govro. We're going to be having an accounting series with him. So that is going to officially start this month. There's going to be the first episode out in the series, and then we're going to continue releasing episodes with him. The first episode is actually on how you should structure your corporation. And Bob, I'll tell you, we've sat in at his presentations before, and he knows what he's talking about. His office actually has a legal side, an accounting side, and they know how you should structure a business, which is really cool. He's going to share that on the podcast. We also did a podcast on how the wealthy get wealthy and stay wealthy. So how wealthy individuals become wealthy and stay wealthy. Kind of cool. So that was a neat one that we did. And we've got a lot of other ones, a lot of other topics coming up that you will see. So don't miss out. You're going to want to watch these and listen to these episodes in October.
Yeah, so I'm excited about the move, Christina. We're going to have a lot more space to for our team and to grow the team, and we're still looking for several people in our operations team, in our Nova Scotia office, in-house people. So if you know some great quality people in the Dartmouth, Halifax area looking to join an exciting company, please let us know. But great month, Christina. Looking forward to this month. We'll catch up on sleep next month, I guess. All right. That's it. Thanks for watching. Thanks for listening. Have a great day.
Thanks for watching this episode of Control and Compound. Don't forget to subscribe and hit that bell button so you never miss a new episode. And if you're ready to learn more, head to our website, controlandcompound.com. The link's below.